traders are very apprehensive about the relentless bid in the market. They think, well, the COVID variant should be lower, the Fed it should be lower, but it's very understandable why the markets are at new highs. The three things the markets care about the most are all aligned. Earnings are at record high, and earnings estimates are going up, number one. Number two, profit margins, 13% plus for the S&P 500. That's a record high. And finally, interest rates, well, they're still low. And Powell, to his credit, seems to have convinced most of the market that there's not going to be any taper tantrum. There might be a lot of apprehension, Brian, but it's understandable why stocks are at a new high.
Yeah, some apprehension. And, you know, it's interesting, Tobias, and you and your team do great work, and you put out something that I think everybody kind of looks at, and it's this euphoria index and sort of where we stand right now. And, of course, we know that when things get too good, that's when you have to start worrying. Where do we stand exactly right now with investor sentiment and that sort of market euphoria?
So, look, our measure of panic euphoria, the one that you're referring to, has actually been signaling euphoria for many, many months. And this is the kind of longest stretch we've seen with those euphoric readings, which really measures positioning. I'll come back to mindset in a moment. But that euphoric reading's been there for many months. The last time we went for this long without having a market correction was back in 1999, 2000. I don't foresee kind of a bubble bursting phenomenon. There are little bubblets we could talk about. But the thing that I'm fascinated by is investors are aware of taper issues. They're worrying about maybe earnings a little slow going forward, and they probably will from the torrid pace we've seen. They are concerned, even if you look at money flows, they haven't been as good as they were earlier in the years in terms of equity mutual funds or exchange-traded funds. But what's kind of interesting is I call this reluctantly bullish. People are positioned because the market keeps going higher, and they can't suffer from what we call FOMO, fear of meaningfully underperforming. And therefore, they have to be there, even though they're aware of these issues. So there's this notion of kind of, we got to be there bullish, even if we're a little concerned.
You know, Bob Pisani, in the previous hour, we've made historical references based on market numbers to 1987 and to 1929. And now I got Tobias saying, well, it's kind of like 1990, 2000. Those are not maybe 3 or 4 years of market history that we want to necessarily reference. You talk to people every day. Do you sense any kind of underlying nervousness bubbling up anywhere, Bob?
I sense a lot of underlying nervousness. I don't sense a lot of 1987 sentiment. That kind of apocalyptic thinking is always out there, but the numbers just don't speak to that. Look, we know what the risks are. It's the known unknowns that are out there. We know that the Fed could make a misstep in their handling of the messaging. So far, it hasn't happened. So far, Powell has done I think, masterful job of communicating what they want to do and calming the markets down. Secondly, we could have some kind of new variant somehow appear that truly is a threat to shutting down the economy in a much greater way, even than the Delta variant. And finally, we could have some other unknown event that could happen that would cause earnings estimates to suddenly stop going up and move to the downside. There's a real unknown that's potentially out there. But other than that, right now, everything is still aligning. I think the traders are apprehensive because what they call this relentless bid in the market baffles them. Intuitively, they think because the economy is a little bit under threat because of the Delta variant, markets ought to be lower. But the earnings, the profit margins, and the interest rates all speak to a very good reason why the stock market is at new highs. It's not a great mystery. It may be stressful, but it's not a mystery.
Yeah, maybe not a mystery at all, Tobias. And, you know, we talk about the known unknowns. Certainly COVID is a part of that as well, although I don't think there's going to be any political will for further shutdowns and maybe public will as well. That said, you look out and your job is to model markets and the economy. How much do you model that in? Is it even possible? And do you see the possibility of sort of another COVID-related economic slowdown?
So certainly there could be one if we were to get really an awful variant that evades the vaccines and things like that. And as you've said already, there isn't really this political or public will to go through it. In fact, you're seeing protests against shutdowns, not just in the U.S., but in France and Germany, et cetera. So people are a little bit reluctant to go back to that kind of environment. Again, if something horrific developed, we all worry about our safety first versus even our jobs or the economy. But I think there are 4 real pressures that we got to think about over the next several months that are coming to bear, headwinds, if you like. One, Congress is going to be back in a few weeks from their recess, and they're going to be very focused on taxation in terms of being able to fund, particularly the reconciliation bill. And what are tax rates going to? What's the impact of that? And that could be something that upsets the earnings apple cart. Number two is maybe more persistent inflation that the bond market and the equity investors are going to worry about. You know, it's one thing to talk, as one client asked me, about 5.5% inflation in June, but what if it's 3.5% in November? That's going to be a little hotter than maybe the Fed wants. Number three would be this profit margin issue. Our profit lead indicator margin lead indicator model is telling us that we're likely to face some pressures, and it might be costs going up that aren't easily pushed forward. We're hearing some companies, for example, even talking about freight costs hurting them in the coming quarter. And the fourth item that we're kind of concerned about is tapering, and that you're hearing governor after governor telling us they're going to go there. Maybe we don't have a taper tantrum, maybe we have a taper tizzy.